Holy smokers, folks.
Strongman personal finance.
Ain't no dang jokers. Alrighty, folks, big video. So in this video, I want to address the last time I was ever bullied in life. The last time I was ever bullied in life. The last time I was ever bullied in life. The last time I was ever bullied in life.
Howdy there, folks!
You're spending more of our money on those stocks. I'm gonna beat your ass. I'm gonna beat your ass.
Boy, did I get brutalized today.
Welcome back to Strongman Personal Finance. We just had a Jeremy Financial Education stock drop 23%, so nothing new. Let's go check it out. Why don't we? What stock is this? It's Oatly, my deep throatly. So Oatly makes oat milk. Let me tell you why Oatly is hot garbage. Very simple. Number one, it's got no moat. If you go in the supermarket, go to the soy boy oat milk section. There's like 4 different brands of oat milk. And there's even like Walmart generic oat milk in the Walmart store. The Walmart store. So there's a lot of competition for oat milk, okay? There's no moat. They're just oats. You put oats and you put it in milk and you mix it together, whatever they freaking do. I don't care how they make it. Doesn't interest me. It's a bunch of soy boy garbage. But there's no moat in this company, number one. And number two, Oatly is massively unprofitable trash. As a matter of fact, the CEO is like a communist socialist weirdo that doesn't care about profits. I remember reading that in a report. He just cares about saving the world. And that's who I want as my CEO, running a company that I'm investing in. So let's go ahead and check out Oatly. And I'll show you why it's hot trash. So we'll look at the earnings in a second. You look at the revenue, right? It's got growing revenue. Okay, decently growing revenue. That's fine. Revenue, my avenue. Revenue growth is not everything. Hopefully we've learned that by now, ladies and gentlemen. If you don't make money, you're trash. Okay? We go down to gross margin. Their gross margins absolutely collapsed during the pandemic. They collapsed massively. And now they're starting to recover, but they are nowhere near where they were in 2020 and early 2021. This is a disaster for this company. The amount of costs for their goods have gone up enormously. And they're starting to recover a little bit, but it's been pretty bad. Remember, the cost of goods sold is just the cost of the oat milk itself. So if you think about it, it's the cost of all the ingredients that go into it. It's the cost of the labor, whoever puts it, makes it in the factory, which I believe they outsource to another company. And it's the factory overhead. All of that gets allocated to the cost of making the milk. Then Oatly takes the milk and they sell it to Walmart or whatever. So their gross profit is just the profit from selling the milk. That doesn't include the fake milk, the soy milk. That doesn't include all the expenses for selling, marketing, interest, taxes. That's not even included in gross margin. So if you have a low gross margin, you're going to have a very hard time becoming profitable. That was Tattooed Chef's problem. I saw that many quarters ago. Operating margin. Massive negative operating margins. This is all their profits, excluding interest and taxes. Profit margin is even worse, okay? This company loses money hand over fist. Have they ever had a profitable quarter? No. They just lose money quarter after quarter after quarter after quarter. These stocks are not hard to avoid. You go to stockanalysis.com, you see a bunch of massive negative numbers that aren't getting better. It's probably a very speculative company. Okay, it's probably diluting the shareholders. Let's go look at the statement of cash flows. I don't like the balance sheet on here. Look at the statement of cash flows. They don't even generate positive operating cash flow. Okay, they are burning cash every quarter in operations. Wow, I wonder where their cash comes from. Debt or share issuance, right? They've got capital expenditures. They got to maintain property, plant, and equipment. And, oh, look at this. They're packing on debt. As a matter of fact, holy freaking crap, they just packed on a ton of debt. Oh, my God. So let's go ahead and read the quarterly results. 7/27/23. Oatly, my deep you-know-whatly, okay? Jean-Christopher Flatten. What a name. Jean-Christopher. In the second quarter, we continue to make progress towards our goal of achieving profitable growth in 2024. Let's go back and look again. Does this look like profitable growth to you? Look at the operating margin. Profitable growth. What a freaking joke. What a moron. That's why you can't listen to these stupid CEOs. This progress is more evident in our EMEA and Americas segment, both of which continue to improve adjusted EBITDA. That's a clown metric. When you see adjusted EBITDA, it's earnings before interest, taxes, depreciation, amortization, and whatever other random crap they're adding back. So it makes them look profitable because they just don't count most of the expenses.
Oh, after I go to work, I make some X amount of dollars a year, and I don't have a mortgage. I don't count my mortgage in my expenses. I don't count my car payment. I don't count my insurance. I don't count my food. I don't count anything. So I'm actually a very profitable person. Yes, my adjusted clown EBITDA for strongman is very good.
See the clownery in that? It's clownery, okay? Flatulent continued. However, as Asia has transitioned to post-pandemic era, consumers have behaved differently than we originally expected. What, they didn't want your garbage soy milk? Similar to the improvement plans that we have been executing, we've initiated a comprehensive improvement plan that will enable our Asia business to adapt to the evolving environment and strengthen the core business. I am more bullish on Asia than ever, okay? If the Asians aren't drinking this soy, they're going to take over the freaking world. Mark my words. All the people in Europe and the Americas are going to be freaking weak and fat with man titties, okay? Okay, so basically it's a bunch of Asia's falling apart, basically. They're not doing well in Asia. So if we look at the revenue my avenue, right? So revenue my avenue for, it looks like emerging markets or Europe. I don't even know what does EMEA mean? It's probably Europe. So their revenue's up. America's up in the revenue's up in the Americas, but it's dropped in Asia. Okay, so obviously they are experiencing decent revenue growth. I can't knock them for that. They're growing revenue pretty significantly in Europe and in the United States. Asia, not so much. Okay, and I think they were having problem with currency. Yeah, the currency conversions was hurting them a little bit. So they have strong revenue, but Asia's falling apart. Let's see. Gross margin, net loss, EBITDA, closed. Raising $465 million before fees and other related expenses. That's right. They just packed on $465 million during a high interest rate environment. I wonder what the terms of that debt are. Probably not good. Would you lend this company money? Would you lend Oatly money looking at those financial statements? I wouldn't, and if I did, the interest rate would be insanely high, okay? But me personally, I would not lend these clowns a single freaking dollar.
I'm going to buy Oatly bonds, bro.
After the quarter ended, initiated a comprehensive improvement plan in Asia, which includes increasing focus on the core business, a simplification of product portfolio, and a reduction in operating costs, okay? So they talk about how they're trying to cut costs. Maybe they cut a little bit of cost. They're still massively unprofitable. They're just losing money hand over fist. What a freaking joke. So let's go ahead and look at the financials. God, these are ugly. Ugh. Do they actually have the financial statements on here? Here we go. Okay. So I see lots of expenses. R&D has gone down. Selling general and administrative expenses have gone up. So they're cutting costs, but their selling general and admin has increased. How much has it increased by? 106, 659 divided by 97, 060. So their selling general and admin expenses have grown by 10%, and I think their revenue grew by 10% too, right? So their selling general and administrative expenses, which is like their largest expense, is growing at the same pace as their revenue. So they're cutting costs.
Yeah. I'm cutting costs. I'm so smart.
Jesus. Finance income and expenses. Look at that interest. Woo! They are paying a lot of money with financing now. Oh my God, look at that interest expense. That is brutal. Look at the year prior when they didn't have debt. They paid $593 million is that thousands? 593,000 in interest expense. Now they're paying 11.5 million in interest expense. This company's on the death spiral, okay? They are paying a fortune in interest expense. Oh my God. Woo-hoo-hoo. Man, what percentage of their revenue is going to interest expense? 11,512 divided by 195,987. Almost 6% of their revenue is going to interest. And 31% of their gross profit. So whatever profit they make from selling their soy milk, 31% of that profit gets taken away just by interest. That's not even selling general administrative. This company is they're going to go bankrupt. I mean, like, I don't know how if this continues, they will 100% go bankrupt. This is the death spiral, okay? Now they've packed on debt. Now their interest expense has exploded. Now they're less likely to become profitable. They need to massively increase their margins to even potentially become profitable. Like, oh my God, this is not good. This company is done, son. I can see why Jeremy Fraud Loser Financial Fave bought it. All right, here's our stupid balance sheet that's like backwards. So intangible assets, let's see, leases, let's see. I'm looking for anything crazy on here. No. Cash, and so they raised a bunch of cash. We can see that. Look how much the cash went up. They borrowed a bunch of money. But they didn't really use it to buy any long-term assets, right? I mean, I don't see any major changes in their long-term assets. They basically just borrowed a bunch of cash to stay alive. That's not why you want a company to borrow cash. And then let's look. Why is this balance sheet so ass backwards? Look at that. Accumulated deficit. Okay, so in the course of 6 months, they burned probably 30% of their equity. Like, oh my God. Let's look at their debts. Okay, non-current liabilities. Yeah, look how much they started borrowing. Liabilities to credit institutions. It went from 2.6 million to $115 million. They're in trouble. Okay, they're borrowing debt. They're borrowing money to pay their bills. They're not borrowing money to like expand the business. They're borrowing money to pay their bills. Imagine taking out like a personal loan just so you can pay your rent. Like, that's not good. Okay, that's what Oatly's doing. And then we have convertible notes. Look at this. Look how much debt they've packed on these convertible notes. And these are due within a year. Oh my God. It's almost like a credit facility, but these convertible notes are due within a year. What? My God, they're so screwed. This company is done, son. I mean, obviously, anything could happen, but this company is done. Done, son. I'm just going to make a number up. I place an 85% likelihood of this company going bankrupt. Like, how do you survive this? You're losing cash, you have negative cash, and you're packing on debt, which increases your interest. And your stock price is going down, so you can't issue equity or issue shares. And if you did, you would have to issue a ton of shares, and you wouldn't get a lot of cash. This company's on the death spiral, man. What a freaking disaster. Jeremy is such an idiot. Like, what a freaking loser. What a massive freaking loser. Jeremy Financial. What a fraud and a freaking loser this man is for buying this hot garbage. I could see this from and it wasn't even hard. I just looked at the financial statement. This is hot, sickening trash. This company is done. I'm calling it. This company's going bankrupt. I am calling it, baby. I'm confident. And if I'm wrong, whatever. I don't freaking care. That was bad. They have so much debt. Oh my God. Let's see. I've been waiting for this video. Yeah, I was busy earlier. I've been doing a lot of tutoring recently. How does Jeremy pick these things, man? I strictly only drink nut milk. No, I like nut milk too. But of course, sign up for my Patreon, bro. Jeremy's a genius. Sign up for his Patreon, bro. This is why Jeremy's a millionaire, because he's a great investor. But Strong Dong oat milk is the future. It's my favorite drink. I drank it for a couple of months, and I was like, I'm just going to go back to milk. I give my kids regular cow milk. They are trying strong, man. They need our support. It's Middle East, East Africa. Or Europe, Middle East, Africa. Do they have operations in the Middle East and Africa? That's why I got confused. I was like, I thought IMI might mean Middle East, but I was like, what? Do they really sell stuff in Middle East? Maybe they do. I don't know. Can we look at, I don't have time. I'm freaking tired. I just tutored for like an hour and a half. I've had a headache all day. Meet Kevin talk stock pick and say, there's so many stocks I can talk about, but I feel like crap. I'm sorry, guys. I'm a bussy. You know, when I tutor somebody, it's like, you know, I can make X amount of money, or I can make a YouTube video and get like $5. You know, obviously I'm going to choose tutoring over making a YouTube video. How much did Oatly pay Jeremy to hide the stock? Who knows? He denies he pays. He gets paid. Japanese stocks, bro. Japanese stocks, bro. We need an emergency stream on EM's Intel earnings cope video. Tomorrow, guys, if I have time tomorrow, I'll do it. I have a lot of tutorings, and I'm just a busy boy. Intel is up. Oh, my God. Paul's such a genius. I've been bashing him on his GEI Twitter and posting screenshots of your vid. I never bought it. What are you talking? I think he sold it. I think he made a video today saying he sold it. What a loser. He's such a loser, man. Like, imagine being that much of a loser. How do you live with yourself? Company being kept alive by other equity. Look, this company is just garbage. It's going bankrupt. It is. I'm highly confident of that. It's very easy to see. It's up because idiots only care about puffed up earnings while revenue margins and operating income got crushed. Oh, let me guess. Were they still unprofitable? Intel, like when I had like $500 in it, I was like, you know, I'll put $500 in it. And then I saw one of their earnings were like, they had massive declines in revenue. I was like, I'm out, man. Something's wrong with this company. This is insane. I was out. I lost $25 or something. I'm an idiot. If I was Jeremy, I would have bought the dip. Maybe Jeremy can try to Elon since he's a Tesla investor, and Elon will make some stupid tweet or X. I mean, the stock will 60. Could you imagine Elon shilling oat milk? What are you tutoring? Accounting. I have a profile. Actually, as a matter of fact, I'll pull it up for you guys. Hold on a second, boys. Young men. If you want to be taught accounting, there's two ways to do it. Okay, you can go through this website. Look at that. I passed the background check. Look at that. You can go to this website, Wisant. I charge $70 an hour, or you can come directly to me, and I charge for tutoring. But here's the thing. I charge $75 for one-on-one, going direct. With this website, it's $70 an hour, but then you pay additional fees. So you're actually saving money by coming directly to me. But if you want to tutor, I have 594 hours of tutoring with a 5-star rating. I will teach you accounting, okay? And I passed the background check. Oh, my God. So this is my profile, wisant.com, Christopher B. Handsome man. Buy my course, bro. Let's see. You see Sam Bankman. I don't even care. He's going to start another crypto company. I think I would die laughing if Kramer brought on Jikh. I hope he does. That would be like peak comedy. Oh, please, Kramer. Please. We should try to make that happen. We should try to tweet Kramer and see if he can bring on Jeremy. You short or complain only? What? I'm not short. I don't short stocks. I just don't buy clown stocks. Intel dividend is only 1.4. The dividend. I paid Paul Gabriel for a one-on-one, and now I'm a. I hope you did it. Happy Intel Cup. They needed to. So I could pay you $75 an hour or Paul $10K for 4 hours. Obviously, Paul's the better deal. I'm just a CPA that's going to teach you accounting. Paul Gabriel is a value investor who has crushed the market. Oh, wait, I just made that up. Paul Gabriel is definitely the more legitimate person to learn financial statements investing from. Okay, I'll teach you investing, man. You want to pay me for an hour of tutoring to talk about VT? I'll talk about VT for an hour. Intel revenue is down, operating income down to negative $1 billion, and earnings were positive. I need to go. I haven't looked at. I don't know what's going on. Get away with it. Sam might go to jail, and I don't even care. Hi, Lord Belly Boy. Hello, my little minion. Paul made a lot of noobs lose money on Intel and Baba. Well, hold on a minute. Baba is not dead yet, okay? I'm also a shareholder of Baba. I actually agree with Paul on that one. Intel, that was bad, okay? Do a video on AT&T and the dividend-chasing covered call buffoon ETFs. I should. I'm tired. All right, guys, that's it. I'm freaking tired. Jeremy's a fraud. Oatly's going bankrupt. I'm calling it. I'm bumping up the likelihood to 95%. It's going bankrupt. It is so bad. All right, have a wonderful night. Cheers!